Welcome to the Money Answer Show with host Jordan Goodman. Whether you are starting out, deep into your retirement, or somewhere in between, the Money Answer Show has the know-how to help you. Now here's your host, Jordan Goodman.
Welcome to the Money Answer Show. This is Jordan Goodman, your host. My guest this hour is Kenneth Ameduri. He is the chief editor at crushthestreet.com. Welcome to the Money Answer Show, Ken.
Hey, Jordan. Thanks for having me on.
So it'd be great to get a little bit of your background. So give us the history you've had to, coming to Crush the Street.
Well, Jordan, I'm humbled to be on. I'm 31 years old now, and I've been able to become a self-made millionaire by the time I was 30 years old. And I say that to share a little bit of how I got here, and of course, just with gratefulness to be here today. I have a lot to learn, but of course, I'm glad to be here. My dad told me when I was a young kid, if you don't want to be digging a ditch when you get older, you need to start a business. So he put a little bit of a fear in me when I was very young, and that's what I did. My mom is actually from Argentina, and that country has experienced a tremendous amount of uncertainty. She had a business when she was growing up. Her parents had a store, and they seen hyperinflation. My grandfather died with cash under his mattress. Yeah. So I was somebody who understood this at a very young age, that I needed to start a business, and I questioned the government. And that's where I started crushthestreet.com. And that's where we educate people and discuss all of these things across the board on how to be prepared for the trends that are coming. And that's how I became a self-made millionaire, was be in front of trends and being able to anticipate human action before things start to happen. And that's what is exciting about what I get to do today. I get to invest in early stage companies and be involved with trends that put us in the receiving side of wealth transfers. And that's what's exciting about what we do at Crush the Street.
So just talk a little bit about the approach of Crush the Street. How do you find the opportunities? It seems like you want to be kind of contrarian in various ways. What is the kind of rationale behind Crush the Street?
Well, I got to tell you, it's one of those things where the mainstream media tends to lag what is truly happening. And so we've opted out of conventional wisdom for many years. And, you have the gold bugs, right, that were called in the 2008 financial crisis. And I would put myself largely in that category. But they called this recession that would, be ongoing forever. Stocks would never rebound. And gold was going to go to the moon. And, all of these people with their tinfoil hats are going to be the ones on the victors, right? But, what we've been able to do is take the middle ground truths of a lot of these things, a lot of the extreme predictions, and look at where is likely to be the next wave of more buying than selling. Like right now, the stock market is largely overvalued for a number of reasons. You have the Fed out there trying to control things, saying that things are okay. But really, we don't see that to be the case. And so, we're going to be talking a few investments over this channel today, this talk. And, that's how we position ourselves. We get in front of things before they start to happen. Bitcoin was one of our hugest successes at crushthestreet.com. And many people blew it off. They thought it was monopoly money. They were, they treated it like whatever. But the fact is, Bitcoin was a huge success for us because we anticipated a basic thing, that more people were going to be buying cryptocurrency than selling it, and we used a lot of metrics to anticipate that. We saw the network effect growing out. We saw, problems around the world, countries like Venezuela and Greece and, Argentina and a lot of these different places that were having banking crisis. And we saw this as, wow, this is a real solution for many millions of people around the world. And sure enough, we saw crypto go from $11 Bitcoin to $20,000 Bitcoin. A lot of people are disparaging it now, right? At $8,000. But, that's not exactly a bad thing when you got in it, between $11 and $800. It's pretty spectacular.
Very good. Let's kind of start with a broad view of things where we are. So we've got the Federal Reserve has gone from an easing, well, it was tightening, now it's kind of easing. It's buying back securities. Europe is loaded with trillions of dollars in negative interest rate bonds out there. Japan seems to be weak. China seems to be kind of slowing down. What is your kind of worldwide view of what's causing the current economic condition we're in right now?
Well, we don't have capitalism in our country and in our world, for that matter. Things are manipulated, things are controlled, and a huge example of that is the fact that there even is negative interest rates. And it's an impossibility. And, this is just, one of the symptoms of the debt problems that we have and just the misallocation of capital that we have around the world. But it just doesn't work in a real free market environment. In a transaction, there's a give on both sides, right? With negative interest rates, you have lenders giving by lending money and then giving again by paying for that service to give. And the recipient gets and gets again. And capitalism doesn't work that way. And it's like water flowing uphill, if you will. And that's what we have around the world right now. I mean, we have this, debt here in the U.S., $22 trillion of debt. I mean, it's growing at, 9% a year? Deutsche Bank, in terms of Europe, is about to implode. The ECB, I mean, we're the heroes of negative interest rates. They went from negative 0.4% to negative 0.5%. They announced assets repurchasing again. And I mean, global debt has increased since 2008 by $80 trillion. And just to give you a metric of $1 trillion with each dollar being represented by a second, I mean, that's 31,710 years. And we've really, in a sense, been thrown back into the Stone Age when you consider what is happening globally. And this is the problem. I mean, we have so many zombie companies right now in the U.S., around the world. I want to say 15% of companies in Europe are zombie companies, meaning that they're dependent on easy money. And really, without it, there would be no business that they would have. And this represents a lot of people. It's like, 40, 50 million people that would be affected if we didn't have this easy money, this negative interest rate policy. And there's so much distortions right now. I mean, right now in Europe, you can get a 10-year bond for 1.3%. The U.S. 10-year bond is 1.8%. How does that make any sense that the U.S. needs to pay more than Greece for the same sort of bond? I mean, apples to apples. I like Greek food, but there's just a massive distortion that has happened around the world. And that's what I see happening. It's hard to know what exactly is going to cause the recession, what the recession is going to look like. But you can see all these fissures that are happening, and massive boom and bust cycles are taking place, right? In the stock market, real estate market, what we saw in 2008, the dot-com crisis.
Normally, if you saw there was $80 trillion of new money being created in the last 10 years, that should be wildly inflationary and under normal circumstances. Yet it seems that we're at a deflationary side where things are falling further. Why is it that that huge influx of liquidity has not caused inflation and has caused, in a certain way, deflation?
Well, it's the world has been trying to deflate since 2008, and they continue to pump money into the system, and it's just not circling the right hands. And again, it's not something that is easy to quantify and to articulate because, we're beyond what's rational in our economy. It's one of those situations where we've gone beyond what the Fed understands, what central banks have understood, and trying to contain this car that's going 130 miles an hour down the highway that just lost its brakes. There's a lot of problems that are taking place. And so throwing trillions of dollars at this thing is going to have implications, and I know it's going to be fatal. One thing I like to tell people, and this kind of it helps people understand why it's difficult to understand how this is going to quote unquote end, is imagine, looking at someone who's 300 pounds overweight. you assume in the next year they're probably going to die of a heart attack or a stroke or, make some sort of extreme prediction on that. But you don't anticipate that they might sit on a chair, break the chair, hit their head, and end up in some sort of coma in the hospital for 10 years on life support, And that's sort of what we're dealing with right now. And, people try to make this perfect prediction on what's going to happen when it's impossible to actually do. And so that's kind of where I am. And that's why I take a step back. And when I think about my investments and what I'm going to do, I'm very defensive. My goal is to not lose money, not lose purchasing power, and to buy real estate that makes the most amount of sense. And again, from that very defensive position into protecting my capital and to try to grow it longer term.
What would be a catalyst that you would look for the unraveling of this whole dangerous situation you see?
Well, it's funny. I mean, we just had that repo crisis, right? That came out of nowhere. Nobody was predicting that. So it was an interest rate situation. I think it's going to have to be some sort of stock market problem. Asset prices are going to get out of control and start to unravel because it could be in the bond market. It could be, start to be dollar crisis, but it's going to be a chain reaction. Momentum will build up. But I would say it's going to either be in the stock market or the bond market, considering we have, this negative interest rate environment. Once we have a situation where it's difficult to get buyers of treasury bills and we lose control of interest rates, I believe that could be a massive catalyst that really sets off the next momentum of this recession.
Very good. Okay, we're going to take a break. This is Jordan Goodman of the Money Answer Show. My guest this hour is Kenneth Ameduri. He is the chief editor at crushthestreet.com, which is a free newsletter. There's a podcast. You can find out more at his website, crushthestreet.com. We'll be back after this.
You've been listening to the Money Answer Show with Jordan Goodman. If you have a question for Jordan or his guest, please call us now at 866-472-5790. That's 866-472-5790. Now back to Jordan.
Welcome back to the Money Answer Show. This is Jordan Goodman, your host. My guest this hour is Ken Ameduri. He's the chief editor at crushthestreet.com, which is a newsletter, a podcast. All of it's free. You can get at crushthestreet.com. Welcome back to the show, Ken.
Hey, Jordan. Good to be back.
With the economic background, we just talked about negative interest rates, all this money being flowed out. One area you do like is gold and silver and precious metals. What is the base case for gold from current levels? And then we'll get into some specific ways to play it. But why should gold do well in this environment?
Well, look what happened last year when the Fed, realized that, this tightening monetary policy really started to come into question. The stock market corrected by 20%. And then gold started to wake up, at the end of 2018. And then we went into 2019. It started to kind of be lackluster once again. And then at the end of May, it really skyrocketed into the summer. We saw, $1,550 gold, up from $1,300 gold. It was a really exciting time. And what's the upside? Is that it? We're dealing with so much post-traumatic stress from the years of gold being, in this, what seemed to be like a bear market. People are so hesitant to buy. And anecdotally, I speak to gold dealers all the time. Still 70% of the retail crowd is selling gold and only 30% are buying. But really it's coming from central banks. Central banks are buying gold. And last year, they had a record amount of buying. 650 metric tons of gold were bought in 2018 by central banks. And they're on track to do that again at higher prices.
Why are central banks buying so much gold?
Well, I think they know something that the retail crowd doesn't. And so, and that was a 50-year record that they broke right away, not an all-time record. But the ETFs are buying gold. And, just to give you a metric here, historically, 2% of portfolios in the U.S. have been in precious metals. Right now, that number is 0.5%. Now, in 1980, it was as high as 8%. So we're still very low in terms of what people own in their portfolios when it comes to precious metals. It's, it's bound to go higher, in my opinion, and even a small move like that will be astronomical for the price of gold. And, I can give you even some more historical data.
Okay, go for it.
1980, gold was $850. Inflation adjusted, its high should be $2,600.
Yeah.
Silver, it's only $1,750 right now. Inflation adjusted for its 1980 high, it should be $155. And of course, the implications for the mining sector, if a gold company's cost to produce is $1,100, and at $1,300 gold, they're making $200, a move to $1,500 is 100% increase in its revenues. So we're talking about extreme leverage with small moves in the price of gold. And it is really exciting, but I know people are very hesitant about this because of what we've seen over the last number of years. And markets have a way of washing and rinsing investors. How many people missed out on 11 or 1050 gold, didn't buy at the bottom because it was a falling knife scenario, then bought, in 2016 when it went to 1350, and then sold when it went back to 1100. That's the way markets work. And you really have to have some fortitude and some understanding and have a longer term horizon on what you do and not be wrapped up with the emotions of the market. And I like to compare what we're seeing right now to a Bitcoin $3,000 moment. Gold moved from $1,300 to $1,500, and people want $1,300 gold again to buy. And, a $3,000 Bitcoin, everyone wanted $1,500 and $2,000 Bitcoin, and so, but then it kept moving, and that window of opportunity kind of went away. And people ended up having to buy a $15,000 Bitcoin, thinking that it might go to $100,000 in 2017, right?
Yeah.
And that's the psychology of investors. And when gold really starts to ramp up and we have big moves that get it into a raging bull market, people are going to be more excited about $2,500 gold, $3,000 gold than they are $1,500 because of their most recent experience of how fast it moved from 2,000 to 2,500 to 3,000, thinking
so
that.
What would be your favorite ways to play gold? Assuming it's going to have a big rise, would you buy physical coins? Would you buy mining shares? Would you buy the GLD, which owns physical gold? Would you buy junior mining companies? What would be your favorite way to play, assuming that there's going to be a big ramp up in gold prices?
Well, I will tell you this. Physical gold is the safest way to own gold, and to expose yourself. I mean, there's so many things, but you de-risk yourself from the risk of a company. You attach yourself to a company, then you deal with the problems of that. Aside from that, you can own some of the biggest companies in the world, like Barrick or Newmont or Goldcorp, some of these majors that are out there that give you that exposure, that have that first mover advantage, that have the dominant force in the market, and have less of that downside risk, but the upside to the rising price in the gold price, the rising price of gold, the exponential returns on the revenues and the net asset values. I mean, that's where things get really exciting when you start to own the mining companies. I mean, you look at First Majestic Silver. I mean, this company moves when the price of silver moves. And something that's really interesting, I'd mention about this. I mean, I've been watching First Majestic Silver for years now. And in this current environment, when we do have, moves in the silver price that are significantly down, we're not seeing that same sort of downward pressure in a company like First Majestic Silver, because there's a real sea change that is happening, I believe, in precious metals. The companies, there's starting to be a little more of a belief that things are going higher from here. We're starting to see companies really ramp up their drilling programs, really ramp up their operations to a point where they're getting ready for this move in gold, which is exciting. It's exciting for me to see, the people in the industry start to get a little more aggressive in what they're doing for the business plan, preparing for that higher gold price, that higher silver price.
So you talked about the majors. You talked about the Gold Corps and Newcorp, Newmont Mining and Barrick. How about some of the junior mining ones? One way to play it is GDXJ, which is an ETF of all the juniors, or there's some specific junior miners that you like as well.
Yeah, I mean, Triumph Gold Corp was, my latest speculative play that we're looking at. It trades under ticker symbol TIG on the Toronto Stock Exchange. I mean, this is a company that Newmont has actually owned 20% on. They went in and bought it for 53 cents. They own their shares at 53 cents. And this is a company that, arguably could be worth $520 million. They're trading for $40 million right now. The CEO, the chairman, they've gone in and turned the Free Gold project that's in the Yukon. They drilled the deepest and richest hole in Yukon history with Triumph Gold Corp. And they're really striking while the iron's hot. They purchased this company. They financed it in the depths of the bear market. And I think fortune can really favor their timing here as they're really hitting the ground running with gold prices going 1,500 plus. It's a really exciting way to play this. In terms of silver companies, I'd look at First Majestic Silver if you're looking for a smaller way to play. There's not that many ways to play silver, by the way. There's a ton of silver out there.
But while you're talking about silver, what is the case for silver over gold? Silver is more of an industrial metal. Why would silver have a bigger move or a more significant move than gold?
Well, looking at it from a monetary perspective and just actually over time, I mean, history shows that silver moves in bull markets for gold much more than gold. The move in just to get to its all-time high, gold needs to move, 25%, 30% to get to its all-time high of $1,900. Silver, almost needs to triple to get to its all-time high. Silver's a much smaller market than gold. Just a small move in gold will spill over into silver. And it's just like the way the cryptos move. Bitcoin moves first, and then you have a lot more of the smaller companies that follow it. And in the precious metals world, there's not a whole lot of ways to play this in terms of physical. It's not like crypto, which can be printed and created a million different times. There's only two precious metals in the world, and gold and silver are one of them. We're just at historically low prices. It's time. I mean, with financialized assets at record numbers, a small move, into precious metals is going to have serious implications of it. I mean, Russia is removing the VAT tax on gold, on a lot of their gold, which is incentivizing their people to own gold, which is very interesting, very exciting for those people.
If what we talked about before, that there may be some catalyst to kind of bring down the economy that's overinflated, if that were to happen, would that be very positive for gold and silver?
Well, if we look at what happened in 2008, initially there's going to be a liquidity crisis. When you have issues with stocks coming down, margin calls and all of these different things, people sell anything and everything to meet those demands, meet those creditors and to pay their bills and, what people need to do. But I believe that will be short-term and temporary because I believe capital will re-enter these safe haven assets quickly. And so there's a possibility that we see a short-term correction, but the window of opportunity, I believe, is still now. I don't think you wait for something like that to happen and hope you catch a small break here, because the reality is silver could be at $30 when that happens, and it moves to $25, and then it moves back up again. So trying to sell $1,750 silver, hoping for $12 silver for it to go to $50, I don't think is the way you play it here. So it's possible we see a short-term correction, but it could be at much higher prices. In fact, I would almost guarantee that it's going to be at much higher prices than where we are today. I don't think we're going to see these prices for too much longer.
Do you like the ETFs as a way to play the broader sector, like the GDX for bigger companies and GDXJ for the smaller companies?
I personally don't. Not that I'm against it. It's just because I'm in the sector, I own the companies directly, and I have my own basket, if you will, of companies that I own. So the GDX and the GDXJ. I mean, there are ways for people to, I guess, to really not have to do too much brain work and think about it, which again is I'm not against whatsoever. And by the way, the HUI, if you look at it, tells a lot in this current environment. At $1,400 gold in 2016, the HUI, and by the way, in 2016 it was only 1,400 for like a second. I mean, for the most part, it was 1,350. The HUI was like 270, 280. And in this environment with $1,500 gold, and a gold at 1,550 or so, the HUI went to like 225. And so what this tells me is that the mining sector, despite a higher gold price, there's a lot of people in denial of where we are, and the potential for us to see a massive move higher in some of these precious metals companies is very much there. It's not being reflected because, again, I go back to that post-traumatic stress of what we've dealt with for so many years. We need a higher and higher gold and silver price to get that confidence back in the sector, and we haven't seen that yet. Once we get to $1,600 gold, $1,700 gold, things will really start to ramp up.
This is what Keynes used to call the animal spirits, right? So, all right, we're going to take another break. This is Jordan Goodman of the Money Answer Show. My guest this hour is Kenneth Ameduri. He's the chief editor of the website and podcast crushthestreet.com. We'll be back after this.
You've been listening to the Money Answer Show with Jordan Goodman. If you have a question for Jordan or his guest, please call us now at 866-472-5790. That's 866-472-5790. Now back to Jordan.
Welcome back to the Money Answer Show. This is Jordan Goodman, your host. My guest this hour is Kenneth Ameduri. He's the chief editor at crushthestreet.com. It's a free newsletter and podcast that you can get at that website, crushthestreet.com. Welcome back to the show, Ken.
Hey, Jordan.
So we've talked about the stock market. We've talked about gold and precious metals. The next area to discuss, which you're an expert in, is cryptocurrencies. You got in very early. It had a huge rise, a big fall. It's kind of come back, particularly Bitcoin. Before we get into the pricing, what is the reason why you think cryptos could go much higher? Are they going to be used? Are we going to be buying and selling things in cryptos? Or what is the use case for cryptos long term?
Well, specifically for when it comes to Bitcoin, there is this situation right now where I believe it's going to be used as a store of value. And yes, it's going to be used to transact worldwide. And it's going to be something that people can slowly start to use globally. I mean, really, there's no currency around the world that the government has issued that historically have ever lasted. And with something like crypto or Bitcoin specifically that's limited, that nobody controls, that has an immense network effect, I believe this is going to be around for many, many years. And it's got so many reasons. It's a first mover. It's a dominator. And it's something that people are building more and more trust in as they realize the actual Bitcoin network is impenetrable. I mean, it's something that, is really revolutionary. And because of that, there's going to be a lot of reasons why people get into it. Largely, because of this belief that it is something that's sound and works, we're going to have the institutional money start to move into crypto. And once we see that to just the smallest degree, I mean, Bitcoin has to go up. I mean, it's really like Niagara Falls going into a water hose. And I believe that is going to happen and continue to go higher. Now, sure, we're at $8,000 now. I'm sure a lot of people wish they heard this at Bitcoin $11. Is it going to $8 million? I mean, I don't think it's going to go that high. But I mean, do I think that it needs to go much higher to get to a stable price? Yes. I mean, gold has had 5,000 years for the world to get introduced to it and for the price to find some sort of equilibrium. Bitcoin has only been around for 10 years, And there's still a lot of people that don't understand it, don't trust it, and rightfully so. It's very rational. And if we can manage our expectations, it's normal for this to be something that's very volatile and people still trying to understand it. But I'm to a point where I believe that many more people are going to come around. I believe that institutional money is going to start coming into Bitcoin to a larger degree. And, even non-correlated funds, a portion of portfolios where you don't want something correlated to the stock market, for instance. I mean, this is going to be a part of portfolios and funds that, don't even have to do with crypto. I mean, I've invested in some crypto hedge funds just to throw some money at them, support some startups. Yeah. But, this is going to be all over. It's going to be mainstream.
How would you recommend, from somebody who agrees with you that they think crypto and Bitcoin particularly is going to go much higher, how would you recommend that they play it? Are there specific platforms that you like? Should they keep it on a platform? Should they have a wallet off the platform? How do you have people play it?
Yeah, and it's such a hard thing to just be a blanket statement for somebody. I mean, if I was talking to someone who's 65, who has saved 40 years of wealth and has compounded it, and this 40 years of wealth is representative in $500,000, I'd be very cautious to say, hey, put your money or a large portion of that in Bitcoin. Maybe a small 1 or 2%, 3%. And if it does what I think it's going to do, that 1 or 2% will reflect, and be 5 and 10% of their portfolios longer term. And they don't have to be too concerned about the ups and downs of this. But, if you're a younger person, you haven't saved a whole lot of money, you want to throw a couple paychecks at it, and you're 30 years old, you haven't saved for 30 years, yeah, you could put 50% of your portfolio in something like Bitcoin. I know that's an extreme thing, but for someone who hasn't done any savings, they want to just speculate a little bit. It's a much different world.
And how would you do it? What platform specifically? Is it Gemini? Is it Binance? Which platform?
Yeah, I've bought my crypto through Coinbase. I bought them through some individual brokers, people who sell. And that, to me, doesn't make a whole lot of difference where you buy it. Unless you want to keep some sort of anonymity, you want to buy it on the street, you don't want the government in your business. All of that stuff, do as you will. But you can get crypto on Coinbase. It's the platform that really was responsible for the 2017 rise. It made it very easy for people to onboard into Bitcoin. And I think you can buy it there and you move it onto a wallet. Yeah, you don't want to trust a lot of these newer platforms because they're not tried and tested. We've seen the failures of a lot of these businesses.
People have them stolen, right? They've had their Bitcoin stolen online.
Yeah. Well, and they've had a lot of situations where those platforms that have failed have reflected on the Bitcoin prices across the board. And that's starting to be not as much of an issue because people are starting to understand there's a difference between a company that services the Bitcoin network and actually the Bitcoin network. Yeah. So, yeah, hold your money. But, it's just like owning gold at your house. Somebody can come into your house and take your gold, right? Yeah. A little harder to do that with crypto, but it's very easy to lose a thumb drive or some sort of code. These are things that you really have to think about when it comes to your wealth, especially if it's like some of these millennial entrepreneurs who bought in 2015 and they got, a few $100,000, $1 million in crypto. You really have to protect that, and you're the heir when it comes to those things. You're the problem. You're the risk.
So the big question about crypto always is, well, these governments and these central banks don't like this, and they're going to try to close it down. I think Korea and China have basically said, we don't want any cryptocurrency trading at all. How is it going to succeed if all the governments and central banks of the world are against it?
Well, I don't think all the governments and central banks are going to be against it. I believe it's going to happen where there are going to be certain governments, especially ones that need the capital, they're going to understand, like, hey, there's an opportunity to attract capital into our country, because the blockchain is a great platform. It's going to be used in business, and there's going to be a lot of ways to generate business on the blockchain. And so I don't think it's going to be this complete world control over this blockchain platform. And because of that, capital is going to flow where it's treated best, going back to that capitalism talk.
Yeah.
Water flows downhill, and if you try to contain water in your hand, it's going to come out somewhere. It's impossible. And so, especially as we talk about some of the problems that go on in government, Argentina, Venezuela, a lot of these countries do a lot of things to contain capital in their countries. And, in those types of countries, there's extreme controls over things like, money flows and money transfers. But something like Bitcoin, I mean, this has offered people the opportunity to put, crypto on their computer, leave the country, go to Denmark or wherever you want to go, have your money there. And even if you don't like it, sell it. I mean, and that's where a lot of the value is going to come from. It's going to come from the unsustainability from these countries, and their capital is going to flow to where it's treated best. And on the blockchain, on this decentralized network that people trust, it's a great place to put your money to a certain degree, especially if it's something like the Venezuelan bolivar. I mean, what's more volatile than that?
Right.
We use the dollar as a benchmark, but what about these other currencies that are really
worthless, basically? All right, before we go to break, I just want to get a brief thing, and we're going to talk about more after the break, which is cannabis stocks. You've been a big advocate of those. They had a big rise when they legalized in Canada in October of 2018. For the most part, they've been falling ever since. Is cannabis a long-term growth industry people should invest in?
100%. Cannabis is now beyond the threshold of legalization. I know we haven't seen it here in the U.S., but now that we've seen California go legal, how does the rest of the country not fall in line with it, especially with all the revenues that they're going to be making? 62% of Americans think marijuana should be legalized. 74% of millennials are in favor, and even the baby boomers are coming around. And so, with all the jobs that it's going to be created, I don't know how people can be against cannabis for too much longer when you have just all the revenues that are going to be coming in. And you have a situation too where you have these like more liberal cities where the dispensaries are, in the legal aspect of them there, and the support of the more liberal population. But then you have the farmers too, which are going to start benefiting from it, right? These are people who may be largely conservative that are going to get educated, and they're going to start making money growing cannabis. So you're going to have this bridging of political gaps when it comes to cannabis, especially when you start getting the medical research that cannabis is largely a superior vice than many of these other.
So if it's such a growth industry, why have the stocks fallen so sharply in the last few months?
Well, I mean, companies get out in front of their skis, right? And that's the way markets work. I mean, Canopy Growth really wasn't making any money, and the valuations were getting out of control. And markets are the markets. People think that they're going to go to the moon, and things get out in front of themselves. And then when the bear markets set in, it's brutal. When you buy a stock and it goes down 50%, you get burned like that, and then it keeps going down. It creates a bad, horrible sentiment for people to jump back in. So it's really going to take companies growing their fundamental earnings and building out a real infrastructure before we can justify the values for a lot of these companies. And once that starts to happen, then you can have sustainable growth in the cannabis sector and really start to have these companies paying out dividends. And you can have the Anheuser-Busches of the cannabis sector come out, and medical companies, companies that service medical companies, and all of these different things that are going to come about because of it. But we're in a situation now where things just got out in front of themselves, and bear markets are brutal. That's the fact.
That's the way it is. Very good. All right, we're going to take another break. This is Jordan Goodman of the Money Answer Show. My guest this hour is Ken Ameduri. He is the chief editor at crushthestreet.com. You can go to that website. You get a free newsletter, free podcast, all kinds of information about investing at crushthestreet.com. We'll be back after this.
You've been listening to the Money Answer Show with Jordan Goodman. If you have a question for Jordan or his guest, please call us now at 866-472-5790. That's 866-472-5790. Now back to Jordan.
Welcome back to the Money Answer Show. This is Jordan Goodman, your host. My guest this hour is Kenneth Ameduri. He is the chief editor at crushthestreet.com, and you can go to that website, crushthestreet.com, to get more from him. Welcome back to the show, Ken.
Hey, Jordan.
So another area you're interested in is artificial intelligence, or AI. Just kind of give us a general sense of where we are now in AI and where it's going to be going and how that's going to be affecting people's lives.
Yeah, well, it's an interesting thing. We actually did a short documentary on this, a couple years ago. But AI is one of those things when you have the bridging of the gap of humans and machines, and machines getting smarter than humans in so many ways. And that's the real implication of this. And I remember when I saw Google's AlphaGo, DeepMind, beat the most sophisticated player, Lee Sedol, in a game of Go. It's this ancient Chinese game. I mean, think about, checkers or chess, but there's more possibilities to play this game than there are atoms in the universe. So there's no way to pre-program the game or the intelligence of this machine. And they started off with a blank slate, and it continued to learn how to play this game until it actually beat the best player at it. And that's huge. I mean, this is the implication. You're going to start seeing AI take over, not just menial jobs, not just repetitive jobs, but jobs that are six-figure salaries, analytical jobs, and really start to bridge that gap. And, a lot of people are concerned about it. A lot of people worry about it. And it's going to be a game changer for many people who are in the truck driving industry and whatnot, who depended on a career that's going to be disrupted by, artificial intelligence. But overall, I think it's going to be huge in terms of the growth that we're going to see.
Where will the winners be? We talked about the losers, people who have jobs that can be kind of automated by artificial intelligence, but who would be some of the winners or industries, or how would consumers benefit from AI in various ways?
Well, I mean, just think about health, for instance. We're going to see artificial intelligence in our health. I mean, I don't know if you have any sort of monitoring going on right now actively on your body.
Well, I have an Apple Watch. Apple Watch does
There you go. And then you knew where I was doing my interview from before the show here. But, what if we all had some sort of device on us that was monitoring our heart, monitoring our blood pressure, monitoring our, diabetes level, sugars, and all of these different things in a real-time basis? At the surrender of extreme privacy, would we all start living longer? I mean, is that a possibility? And so there's a lot of implications too on just even our lives. The sacrifice of privacy for our livelihood, and that's going to be huge. And we're going to see that happen more and more. I mean, I don't have anything on me right now, but I kind of, to a degree, wish I did. I mean, I got an Alexa in my house. We got a Google Home. I mean, we have, people listening to us in different ways. But, they may also make our lives easier. I mean, personal assistants now, instead of, really needing a personal assistant, maybe you get some of that work done with a calendar, talking to Google and, optimizing our drives to work. And, one of the ways that I think we're going to see a lot of efficiency take place is if we do get these driverless cars. Elon Musk thinks that there's going to be a 10x reduction in traffic accidents.
Yeah. So you think
if we have a 10x reduction,
driverless cars and driverless trucks are going to happen. There's a lot of people who are resisting them and saying they're going to be accidents, and people like to drive, so they don't want to give it up. But you think it's going to be real, and how quickly do you think we'll start really seeing a lot of driverless cars and trucks out there?
I mean, that's an industry that takes some time. I mean, even like the life cycle of a car is what, 7 years, 5 to 7, 10 years. I mean, it's going to happen quickly, but I think it's going to, quickly might be, 2030 to 2040. And I know that seems like a longer time frame in terms of, what we normally look at, but it's actually relatively quick in terms of a real revolution in the way we drive our cars and the way we get around. And so
another area is robotics. How do you see artificial intelligence? I mean, how smart are robots going to get, and how will that be seen in our lives?
Well, it's robots are going to be able to anticipate things for us. I mean, we're seeing that now, right, with weather and, anticipating better routes. I mean, I don't even have to tell my phone now where my home is. It knows exactly where I live based on just the patterns and the things I do in my life. So, I mean, we're going to see targeting ads that make it easier for companies that do, ads and different things like that. One thing, I think you might have told me this, Jordan, and it stuck with me. Airbnb uses artificial intelligence. I mean, right. I think your
son works there.
Like 150 to 200,000 leases happen every day. There's 5 million leases every, at any one given
That's right. Well, it's about 300,000 a day, and they have 5 million listings. That's the latest numbers, yes.
Yeah. So, and people think like, oh my gosh, we're going to be revolutionized by, this new technology and AI taking over all these jobs. But this opportunity has given people an opportunity to open up their doors and create a business like we've never had before.
Yeah.
I mean, what an opportunity that is. And then creating, job opportunities and businesses and affordable travel that we've never had before. And so I really think that, there's going to be a lot of things that are very indirect that come about that people aren't even wrapping their minds around. And I'll give you an example here. We have the car, the automobile. When that came around, we also had fast food that became like an indirect boom because of the automobile. People being able to go through drive-thrus now. That became a thing because of an automobile. And I guess people weren't even anticipating that. And we're going to have some, huge impacts with AI that are going to completely change the way
anticipate them now. Yes, we have about 2 minutes to go, Ken. Just kind of sum up the opportunity for people to do better in this very volatile environment. We've talked about cryptos, we've talked about gold, we talked about a lot of things. Kind of sum up the opportunity available and the dangers available from what we've talked about.
Yeah, no, absolutely. It's important for people to take this and use it as motivation. Use it as maybe, a little bit of fear, if you would, or something to say, hey, I need to take one step today that will compound over time, that will get me ahead, that will strengthen my network, that will strengthen my skills. One thing that people believe, and which is a half lie, is that you need capital to make money. You need money to make money. And that's only half true. When it comes to seed capital, a lot of times that comes from your talent, that comes from your skills, that comes from your hard work. And when you understand that, you're able to apply those things to attract capital that can then grow you over time. And using a lot of this information, for me, on a micro level, is motivation to build my business. That's how I became a multimillionaire by the time I was 30 years old. And so I highly encourage people to get out there and to find out what their passions are and to develop networks and to pour themselves into things that are going to compound on themselves. And the indirect benefits, the synergy that you start to create in your life will really start to get ahead. And even savings, once you start to get in that mode of savings and investing, it might seem small at first, but once you start to build that and get good at it, and then you start meeting other investors that are good at it, and just to build a network, I mean, it starts to really compound, and you start to find better deals. You get better deals on real estate, all of these different things. So I know we're out of time, Jordan. Thanks for letting me come on the show. And
very good. Well, thank you so much. My guest has been Ken Ameduri. He's the chief editor at crushthestreet.com. You can go to that website, crushthestreet.com, to find out more. He's got a free newsletter, a free podcast, all kinds of things, talking further about what we talked about today. So thanks so much for being a great guest on the Money Answer Show, Ken.
Thank you, sir. Thanks for having me.
Thank you. We'll be back next week with another edition of the Money Answer Show. Goodbye for now.
Thank you for joining Jordan Goodman and the Money Answer Show. If you have a question for Jordan, please visit his website at www.moneyanswers.com. And be sure to tune in every Monday at 12 p.m. Pacific Standard Time right here on Voice America Business. See you next week.